Hi there, I'm Isaac. Today I'm going to take you through a trade in the S&P E-mini futures. So we're going to look at like a short squeeze that starts with an open drive. This is from Friday the 30th of July, so it's the last trading day of July. So before we look at the actual trade, what we're going to do is just have a bit of a look at the S&P from the bigger picture. So I remember actually this reversal here where the market sold off in the cash session and it closed weak down here, continued in that little bit after the cash close. Then the next week opened, traded lower and pulled back up, and then cash open for the next week up there. So that means, I suppose the key thing is that this area here is all overnight positioning. So the overnight market is short. That then set a squeeze, which started off the next big rally. Then up here, you can see that the market has offered, it formed this horrible little block down here, which it then squeezed, failed to take, and then bid again. And then again, if we come down here, again there's another poor volume block here at the low. The market then squeezed off it and drove higher. So you can see that this is like quite a key pattern in this market at the present. And so it's going to come into play today, not on such a grand scale as like this, this, and this, but still is important. So if we take the same 30-minute chart, there was a compressed 30-minute chart, now we're just going to look at one that's expanded a bit more. And, just like over a small scale. And so what we've got here, basically these dotted dashed lines here are a week. And so what we're looking at is we've got this market that's in a range. Now, just a few things about this range. This low here is poor, like a 2 TPO low. It's holding this cash gap in here, so here's the cash close. And so, okay, so that's interesting. So there's poor level holding this cash gap. Then up here at the all-time high, we have another ledge, like a 2 TPO high up there. Within this, we had FOMC, and then this offer here was put down to Amazon earnings, which were a slight disappointment from what the market expected. So the reason you can kind of, FOMC and Amazon, maybe not so important, but the fact that we've got this poor low and poor high is kind of telling us that this market at the moment doesn't have the conviction to go anywhere. Now, we had this offer is all in the overnight session. The market came down and it formed this poor auction block, 5 TPO low. Now, the market then squeezed that and then formed another block up here, which is where it was for the cash open. Now, this looks like a great trade to the downside if you just think about, like technical things, like, we've got this block into this ledgy low block here and then into another block again. So it seems like that, would be a really great move. But then from the other point of view, we've got this market that can't offer and is leaving poor lows because, like say, the sellers aren't convicted enough, and then sellers are getting trapped, and so then are vulnerable to a squeeze. So then I suppose really the key thing is which way the market comes out of this block here. This one here really determines everything. And so another thing about this, with all of this structure here being from the overnight session, this offer being from the overnight session as well, it just means that those hands are quite weak and so quite vulnerable to being pushed out, when the volumes come in cash. Now, the other thing to note here is that this is also the end of the month, so you can get different flows and different price actions. So just go over those things again. So reversals by squeezing, positioning has been a recurring trade in the S&P. The market's in this multi-day P profile, so if I go back here, you can imagine that this is a P profile, and so we're looking on that other page just at this balance at the top of it. And so this market is in this P profile shape in this multi-day balance. There's no excess on either side of that balance, so it's kind of like a really blocky P rather than like a nicely formed one. The Globex sessions created this poor low, so that we've got these shorts that are trapped in this block, or potentially trapped. Bond would have been trapped in its month end. So the trade idea. So when we got this open drive, it then made me realize that we've got, that this market should then squeeze the Globex positioning in this block, and looking for that to squeeze back through the range. And I've said the range, I haven't really defined what that is actually, but I've just been looking at, the market's been kind of rotating this top grey line and this bottom grey line, and it's either going up here and failing above it or failing at it, and then rotating back through. So I just kind of use those as guidelines. That's where I expected the market at a minimum to go back to. So it's pretty much 44 double O's, give or take a couple of ticks. So that's what I was looking for there. Now, in terms of what we're going to look at today, so here, this is the block, that top block, and then the lower block would be down there. And we're going to look at the price action from the open and what should trade up. And then I've said up here that we're just going to discuss what happens up there, so we'll do that afterwards. So first, let's start with the open drive. So one of the things before we go to the ladders is that the market opens here. It does trade lower, but you get this absorption here. Now that was key. So when we go and watch the ladder, one of the things that I thought, oh, this could be absorbing, and then when I went and looked to confirm it on this chart and looked back, the market was up here, and I thought, oh, okay, if this drives now, I've probably missed the optimal entry, and then I ended up looking for my entry later. So that's the first thing we're going to take a look at, just the open drive there. Then the next thing, it's hard to see here, but you've got these zeros and a zero here. So what actually happened, you've got this really big order that, like market order, that's hit the market down multiple handles. You can see evidence of it here again with all these zeros here, here, and here. Then again here, it happened again here, and here. And so we're just going to look at how those played out and then how you can trade around them. So let's get into it on the ladders. Okay, so we're just a few seconds before, actually, sorry, 1 second, let me just check. Yeah, cool. So we're just a few seconds before the cash open. Oops, and I've lost the pen. Here's the S&P here. So cash open is right now. And so we can see that this market should offer down. Yep. And you're seeing some size absorbed. All right, this is awfully fast. Sorry, have I got this on 2 times speed? Oh no, it is 1. Okay, cool. So there was like a little bit of absorption here at the low, and you can see now that the market's definitely driving higher, right? And so here is the top of that block. So we're looking to see if this market can break above that, at which point we're thinking that this market should then start to squeeze. So here we go, it's trading the top of that block now, so now we just want to see the market push above and some size come in. There we go, there's some size. Through the highs, back down a touch. Okay, so that is the open drive. Sorry, I didn't really dictate the start all that well. Maybe we'll go back really quickly and just look at the first few seconds. So again, just to make sure that we see the cash open, which is now. So we just got this, like here you go, the market pushed down there and then again there, and both times, picked up. And now you can see here that the market's starting to edge higher. So that absorption was just in these couple of prices here. It was like quite hard to see and quite fast, but that was, that you needed to really look to your footprint for confirmation. Now, this is where I paused just before. So the market did that open drive, it took this high, rotated back in, and now we're really looking for this market, to push back out. But what we're going to see is something that caught me by surprise. But remember that this is month end, and so you can get, different sort of price action here. So we're about to see it. So the market's, again, just pushed back to the high, which was there, that's where we were, and you can see already this market's just gone straight down to there with no auction, right? So by auction, I mean there's been no back and forth between the prices. It just went zip. All right, now what happened is the market has then just retraced it quite quickly, right? Just in the time I drew that quick diagram, the market's pushed right back above that point and pushed to new highs of the cash session. So it's been paused again. Now, let's just think about what's going on with this. So we had, let's say the market, I'm just going to draw in a random spot right here. The market was here. The market then gets pushed down by a really big order at market. Someone's hit the bid with heaps of lots, and the market's gone down with no auction. So there hasn't been this, there's been this. Okay, and that's key. So then this whole area hasn't been auctioned. So now, given that's the case, you would expect that the market should retrace here. So let's say like the probability of being back here is high, and then the probability of it, going below here before testing this high is low. So here, what you ideally want to do, if you notice that that's what's going on, is to get long as quickly as possible, and you're looking for the market to at least retrace here. Now, remember that this is within, this is like one little piece of price action within this bigger idea of which we should be seeing a squeeze. So what this then does is gives you an opportunity to buy somewhere down here with a really good likelihood of the market getting up here within a bias that the market's already trading higher. So this gives you a really great opportunity for an entry into the market, and so then your stop would be below the low, because you're saying the probability that it should go here before it goes through here is quite high. So sorry, I might have been standing in front of the camera. So the probability of it going to test the high before it tests the low is high. So that is a low probability. This first is a high probability. So anyway, so that is now our, the way we're going to approach this. So let's go now and continue watching. So the market's now, it's bid back to the highs of the session. Now that was the initial point of the breakout. So from the block. So you can see here that the market has sold off again. This time I recognized it and I got long immediately. So again, we're looking for the market to retrace. I think the last it got was down to like 85.75. So remember that first time, it just retraced quite quickly. So now we want to see the same thing again. But you see there was like 100 lot absorbed, a small size went to the next price above it, and then the market's offered back down. So already this is a little bit different. So that concerned me a little bit, and you can see I got out there. Now the market is offering, and so you can see this here I think was the lowest price it traded, and the market traded that price exactly. It didn't push to the price below. So there again, see the 150 lots traded there, then there's a couple of small lots again into that low price, another 40 lots, and so it's traded that price actually multiple times but hasn't gone through it, which is surprising. But the heaviness on the offer here was what spooked me out of that, which was a shame, and I was actually kicking myself afterwards that I didn't just stay in it. It was a kind of a silly thing to do, to get out. But the thoughts running through my head was, oh, what if this happens again? Then I'm going to get blipped down there. But until it happens, it hasn't happened, and you need to play the odds that the market's giving you. So here, so you can see the market's actually still struggling to bid compared to the first one. This bid is nowhere near as good. But here, this is where the market failed the first time. It tried to go back up, but now we're getting there. We've got some size to the next. All right, so then you go. Now you can see the market's now starting to take these prices bid. It's absorbed all the inventory that was on the offer, and now we're expecting this to take back the highs of the day. So you can see here, although this was a lot more difficult, it still actually fit our parameters that the low made after this initial blip I think there was a tiny little extension afterwards that then defined, the low and how this market bid. So again, that still fit our criteria. So that was, a trade that I should have taken and held. And you can see, now I would have been comfortably on side and it would have been all good. In some ways, I should have put on more size there too because it gave me great trade definition and really small or really tight risk. All right, and you can see now the market's gone and it's bidding away. So this is a really good sign, right, in terms of what we want to see. I mean, it's a shame I'm not in it, but, in terms of the trade, because, we're seeing this good aggressive bid and we're expecting a short squeeze. So, that's aligning with what we wanted to see. Now let's see if I can push the button from here. I can't look. Okay, so now we're at the next spot. So remember our strategy. Again, this market's been down. So here was the low. So it looks like I got one tick off the low. And now we want to watch this market again. So it's back down towards the lows. It held the low. And we just want to see this market start to bid. Again, we're actually above the block because there's the top of it there. So positioning should be on our side here. So anyone who was, trapped short in there should be, you'd expect that would be a buyer now. Right, and you can see here that low held and the market's starting to bid. All right, there's the 90 3/4. Still, the market's got to take here. Can it do it? There we go. It's trading back into that price. Yep, taking a bid, taking the 91's bid. All right, and now we're just looking for the market now to start to accelerate. Although it doesn't really have to accelerate. As long as it's staying bid and it's holding this low down here, then we're happy. So again, I probably should have put more size on there because that was perfect. But you can see that I recognized the opportunity and I kind of had committed to this a bit more mentally this time and held in. So that was my entry there. And so now you can see the markets bid up. Now, very shortly, I think we're going to stop and we're going to see this opportunity happen again. Right, so I think now we're probably at the highs of the session. I didn't mark it before, but I think that's the case. And you can see again, as I was saying before, this bid's now looking quite good. Like there's, it's going through the prices relatively easily and aggressively. And so, this is all, the kind of price action we're wanting to see with the squeeze, and we sort of have a target, somewhere off the top of the screen. All right, come on. Sorry, I thought this was a bit quicker. And we're still seeing that good bid, right? Like the size is going up, bid's looking nice. There goes size into the highs there. Again, taking that price bid. Now the next price bid as well, bidding into the price, buying into the price above. So really healthy looking bid right here. And again, like still pinned to the highs, which is what you want to see. I suppose the one thing you got to keep in mind, if it's a squeeze, then someone's being forced to get out of a position. So you want to see like aggression into the highs all the time, like we're seeing here. Come on. Okay, I'm going to quickly speed this up. All right, so we're about to see the market, or the same kind of big order hit the market again. All right, and there you go. So the low, I think, was this one here, 91 1/4. Oh yeah, so I have clipped in, so I got it in there. All right, so it's trading the lowest price, and there's been buying. Obviously, like the market, see you got size there into the 92s. It's a bit of selling. It's moved. I think it was just 91.25 was the price. As you can see down here, like someone's willing to buy that. The price is down to the low again. Someone took 91.5s. So there is still selling there, but you know, from what you're seeing, someone is buying it each time. There you go. It actually went through the low there, like a tick. All right, and then we want to see some buying soon. So this one actually was quite here. I didn't really like how this one stayed at the low so long, and also that, you know, like it went through that low by a tick. And I think I let that sort of impact what's going on. But really, I suppose that's key, you know, that the probability of it going back to the scene of the crime and retesting that of this blip is really high. And, you know, that was worth it. So in my head, my mental thoughts here were like, oh, if this doesn't bid fast enough and this guy does it again, then I'm offside with more size, which I didn't really want to do. And so I think I ended up getting out of it probably more as like a bit of relief to myself, which was a total waste. You know, when I actually got on at a really good price. So really I should have, you know, been adding in, you know, getting some real size on in these opportunities. But anyway, I suppose that's the thing, you know, you see this sort of price action for the first time and, you know, I still had a go, which is good. Now, you know, one of the other things to note, which I did mention earlier, is that this is month end. So I don't know if this, you know, is something that regularly occurs, but we saw it the day before as well, but just trying to think of like when this, you know, when this kind of price action is occurring, because we don't see this every day in the markets. Okay, so anyway, we more or less get the picture here. So now if we just go back to the slides, and so you can see here, you know, you can see what this looks like on the footprints. All the zeros are where there is no auction. So the market's being sold. So you've got all the numbers on the left side, so here and here, but there's been no buying, you know, back against it. So you've got zeros on the other side. And that's what it looked like on all of these ones as well. Until the market rotated back. So, you know, that's how you can confirm it on the footprint. So, I said here that we discussed at highs. So one thing is my target was actually up here. But then when we got up here, there was quite a lot of, in this zone up here, quite a lot of reloading and kind of like absorption on the offer. So, you know, the market would bid up and someone would keep reloading the price. And I thought, oh, we're so close to my stop, I want to make sure I definitely, you know, I'm most of the way there. I want to take something out of this. So I took profit there. But actually, when you think about, like, one of the key things about a liquidation is that the market needs liquidity. So, you know, the market's being forced out of a position, and if it's given liquidity, it'll take it. So, you know, the market generally, like, chases liquidity there and it hunts it. So in this instance, if that's doing that, you can be pretty sure that this market's going to stay bid into that liquidity. And if it's not, you know, if it's rotating back down from that, then that's a sign. I mean, I think the hard thing about that is then, you know, if it rotates back, you're going, okay, this isn't working, but it's come so far off the highs. But, you know, like, you can really trust in these kind of moves. You know, high probability it will stay bid into that liquidity. So now, just for key takeaways, we're just going to go back over my execution about applying and holding risk. So these fast offers with no auction are really likely to be retraced back to the scene of the crime, and note that this sort of price action occurred just before month end. Do these big sell orders in any way invalidate my trade idea? That's really the big question you're asking yourself when you're in, because, you know, I got out of a couple of mine, and the answer to that is no. So then I shouldn't be letting let this be an excuse, this order type that someone's putting on these big sales, be an excuse for me to lighten up my position. And then in terms of taking profit, you know, I did that early, but here, you know, when we have this liquidity, the squeeze should hunt that liquidity. So when it finds it, you know, you don't back away, just stay and let the market stay bid, and just trust that that's more likely to go than not. And so generally, you know, like what often happens is the market bids, it finds that liquidity, it stays bid into it, and then it just pops it, you know, and it should usually pop this first bit of, you know, really good solid liquidity. That generally happens at a squeeze like that. It generally takes out at least one zone like that. So yeah, that's a bit of like access and trade management there on this opportunity. All right, everybody, that's it for today. I'll be back for one with you, I think, in a couple of weeks' time, actually, because I'll be away. So I think Harry's going to be covering me.
If you find this video interesting, if you want to go deep into the AXIA training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades, across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.